I think it's marginally disappointing in terms of the inflation progress.
Yep.
You basically saw that all the inflation metrics went sideways, headline at 2%, services inflation, core inflation went sideways. The measures didn't decline as was anticipated. And so I think it will reinforce some of the concerns around inflation persistence that the chief economist, for example, has been emphasizing. At the same time, when you step back, we have seen quite a bit of cumulative progress in terms of where inflation has come from. We are broadly moving in the right direction.
Yep.
And other people on the MPC have really emphasized that point. And for many people, it was already a very close call at the June meeting.
Okay, talk me through the dynamics of how this is going to work, because you sat down and you were kind of running me through this, and it's really interesting. If we get an August cut, November could be on. But if you get a September cut, November becomes more tenuous.
I think that's probably right. Yeah, I think if they go in August, and by the way, we have labour market data tomorrow that could tip the balance here. I think it's pretty close at the moment whether they go in August or not. So I think we want to see some progress tomorrow on wages. There could be some weakening in the labour market tomorrow that could still tip the balance. But I think you're right. If they go in August, I think November is the very natural next step. You have projections again. You can kind of go at a quarterly pace. You can cross-check. If you don't go in August, you go in September, you could go in November, but I think it's a little bit less obvious then, because it might seem a little rushed to go back-to-back. And I think you do want to go back to the projection meetings, because it just gives you a press conference, it gives you a better framework to make decisions.
How reactive does the BOE need to be relative to, say, what we're getting out of the Federal Reserve or the ECB? We're talking a lot about these long and variable lags. What does that time frame look like for the BOE?
You would generally say the lag into growth is about a year, and the lag into inflation is a couple of years.
Yeah.
And, of course, what's different in the UK is that the inflation pressures are still higher, the spot pressures are still higher, yet you have to look forward, and I think there are good reasons that these pressures will ease, and will probably ease by quite a bit over the next 1 to 2 years. And that's really, I think, the tricky calculus for the MPC. You obviously don't want to cut too early given the spot pressures, but you also want to be mindful that you don't keep rates for too long given those lags. And when you look at their forecast, of course, inflation is already at or below 2% in a couple of years' time.
Yeah.
So I think that calculus is easier for both the Fed and the ECB because the spot pressures are lower. And, particularly in the US, in the very recent data, we've made progress. So I think the September cuts by both the Fed and the ECB, I think, are easier decisions than the Bank of England's first move would be.